following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's make it a great week. Don't take anything personally. Your truth is personal to you. Your own opinions and point of view reflect your own agreement and are personal to you. It's no one's truth but your own. Market-wise, let's take a look at it out here. We have the Dow Industrials up 592, NASDAQ up 185, S&P's up 51.5. Percentage-wise out here, you got big percentages, folks. You got the Dow up 2.5%, NASDAQ up 2.6, S&P's up 2.1. Gold contracts trading up $4.20, trading at $13.54 an ounce. Silver up 12 cents, $16.71 an ounce. Copper down a penny at $2.97 a pound. Light sweet crude. Let's go see that crude market. Crude market right now is trading out at a price point of $65.57. Notes and bonds. You get the 10-year note down 5 ticks, 120.13. 30-year bond down 4 ticks, 144.19. Both notes and bonds, they're backing down. They have light volume on the back down. King dollar down 418 ticks, 88.615. King dollar going downtown, 24,000 contracts. King dollar is going to be going after its lowest swing point, and at this particular point, we're only 1 point away from that lowest swing point. So good old King dollar is going to give us some action here. So you're down 418 ticks. You're going after the high volume swing low of 87,830. Right now we're at 88,615. That's in the smaller aspect. In the larger aspect, King dollar has been in a confirmed ABC structure on the way down, and we'll see how that handles this 89 area, folks. In well, it's 88. Let's see. So we pull this back a bit. It's actually that's 88,800, 88,800, 89,700, 87,850. Those numbers there are the highs of the 2008 and 2009 counter trend bounce. Those are the highs. Bottom line is that this thing has a price projection of 82,340, and I expect what you're going to see is that we're going to get down into that number. What that's going to do inside the metals market, inside the commodities market in general, is going to give it quite a bounce. We go take a look at some of the higher volume stocks out here. This is what you have. You have the Facebook is down 376. GE is getting slammed once again, down 25 cents. Now it's under the $13 level. It's making its way into that $11.80 level. That is the high of the low of 2008. And the way we're coming into that, bottom line, that thing can be down at $5. Micron, Advanced Micro is down 37 cents. You got Ford up 27, Intel's up 297, Apple, big numbers, up $7. You got Marvell flat. Wells Fargo's up $1.27. You get Dropbox, that just went public. That's up another $1.65. We have JP Morgan Chase up $3.74. JPM, let's go over and take a look at some of these financials. So these are all dead cat bounces. Okay, so J.P. Morgan come off the high of $118, hit a low out here on Friday of 106. You're trading at 110. Bottom line, these are setting up B2Cs of ABC structures on the way down. Well, let's go take a look at Bank of America, BAC. Bank of America, same type of setup. You're up $1.25. Well, this is intriguing with Bank of America. Now, Bank of America actually did get down to the 29.15. Yeah, Bank of America actually got down to the February 5th as well as the February 9th low, and, folks, did it with volume. We came down on Friday with 115 million. You were going into 100, well, actually not with volume. We were going into 143 million. Now you're bouncing. Bottom line, you're going to be right back down there again. This is setting up a B to a C of an ABC, of a potential ABC structure on the way down. Let's go take a look at the XLF. So XLF, what did the XLF do out here? XLF also got down into a price point of 26.77. Unreal. This is, and 26.76. 26.77. You got to love it. So we get down to the February 9th swing area. Got it by a penny. You bouncing with light volume, down with 89 million, up with 59. All this is doing is setting up another structure, building cause to get back down into that whole area. Berkshire Hathaway. Let's go look at Berkshire. So Berkshire, BRK. Berkshire Hathaway is the largest weighting structure inside the XLF. And Berkshire got down to 191.87. It's 189.30, which is the high volume low inside Berkshire. You're bouncing today at 3.5 million versus downtown with 7.2. So that also is setting up lower prices coming out. You're setting up a B to a C of a potential ABC structure on the way down. Let's go take a look at the Exxon Mobil inside the oil market. Exxon right now is trading at flat 86. Now this is already below the February 9th level. The February 9th level here is a 73.90. You're at 73.76. We go to Chevron. We take a look at Chevron. Chevron right now is trading up $1.94. That's in the range. The top of the range for the 9th on Chevron is 118.30. GE. Now this is just doesn't stop, folks. I mean, I figure it's going to go there, but every time that it keeps getting closer, it's like even hard to comprehend. It's wide open now. You're at 12.85. The high is at 11.35. March 2009, sticking out like a sore thumb, man. And if this continues like this, we're going to see GE down at 572. I expect, you know, if GE gets to 572, GE is bottom line. We're going to hear some bad things coming out about GE. What this, of course, they're selling it down today. And what this was, more than likely today, was a front page article inside the Wall Street Journal once again today, bisecting and dissecting just how much more responsibility GE has on many of the companies that they said they sold. But guess what? What ended up happening is they sold the companies, but they had to keep the liability on their books, and it's a huge problem. There's no two ways about that, because guess what? What were those companies actually buying? They were buying business going forward. They weren't buying any of the liability, which is pretty wild. Our phone number is 877-927-6648. We have the Dow Industrials up 602. NASDAQ is up 190. S&Ps are up 53. We're coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 619. NASDAQ is up 194. S&Ps are up 54. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve's got a great program here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, the way that you can take a look and get a 30-day money back on Mastering Probabilities, you go to newsletters, you go to trading newsletters, you hit Mastering Probability right there. Check it out, 30 days, money back guarantee. Steve Rhodes, what's going on?
Well, you know, Tom, there's hardly anything going on in the market for us to talk about.
Seriously. Action, man. Big action.
Yeah, absolutely. It's beautiful. But one of the things I wanted to chat with you and our viewers, our listeners about was to go. One of the things, since you and I were last on Monday, we had the Fed go ahead and announce their rate increase in their Fed's fund. And so the first chart that I want to bring up for folks to see takes us back in the 2004 timeframe when the Fed's funds rate increased 17 times in a row. So between June of 2004 and June of 2006. And that really is represented by the center panel on this chart that we're taking a look at. Those are the exact dates, what the rates had increased from and to. And that is also drawn, or those arrows around the S&P 500. And you and I have talked about this several times. And during that time period of rate increases, we saw the S&P 500 move higher by 12%, so an average of 6% per year if we just average it out. Also happened to be during the same time period that there was a repatriation bill that was passed in the 2004 timeframe. So similar time patterns to where we're at. What's interesting about this chart as well is the top panel, which takes a look at gold, going back to June 2004 to the run-up into the 2007 time frame out here, 2006 time frame. And in essence, what we can see is we had rates that were increasing. We also had gold moving higher. Even more interesting is the bottom panel of the chart, which represents the 30-year Treasury bond. And that, too, moved higher for quite a period of time. Folks, the blue lines that you're seeing on my chart out here, just the end of period, in this case here, the daily chart, so just the end of day closes out here. But many people think, hey, the short-term rates are going up, long-term rates are going down, and that's not necessarily always the case out there. So we fast forward from where we're at, and in this case here, I'm just focusing in on gold because it's had a really amazing pattern that has been in process since the Fed began raising rates back in 2015. So the dates on this chart, you've got December 17, 2015, and you have where gold was trading that day. And at that stage, that set up quite a run. Is it coincidental that that was a bottom in gold and then it ran higher into the September timeframe? Well, I don't know. But if we take a look at the first 5 rate increases, December 17th, March 15th, and December 13th, 2017, by the way, it's March 15th, 2017, each of those set up a nice move higher in gold. That wasn't the case for the rate increase December 14, 2016. That wasn't the case June 14, 2017. Well, we're off to we're off to what we could call maybe 4 out of 6 of these rate increases have also coincided with nice bottoms inside of gold. That's what this chart shows out here. If we take a look at how gold is performed today, and this chart was, many of these charts were snapped maybe about a half an hour ago. If we take a look at gold in relationship to its TAS daily profile, we can see that price broke out above that level on Friday with conviction, wide-ranging bar. 1339 was the top of the box. For those not familiar with the box that I refer to here, the top, which is a red line, happens to be a resistance zone, and the green line, which is the bottom, happens to be a support level. We can also see that right now gold on a daily basis is trying to take out a little bit of a descending trend line that is out there. So if it can take that out, one more bullish check mark for gold. We can move to the weekly profile level, and these profile levels are different price points than on a daily chart. And so what I'm looking for here is to see if gold on a weekly basis can close over to the top of its box, which is 1357.70. So right now it's trading right up into that resistance, the resistance on the daily chart of that descending price channel. And I and subscribers, because we are long the gold miners, I'll explain that in a minute. We would certainly like to see gold close above these levels. It would suggest we're going back to its recent highs, which isn't that much higher, around 1370. We really want to be able to see that taken out. If the other chart that we are, subscribers and I, are really focused in on, though, is gold priced in terms of euros. And so what I'd like listeners out there to, I know that when we look at charts, we're just really looking at gold priced in dollars. Our charts are dollars. But if you're sitting over in London, you might be looking at gold priced in pounds. If you're sitting right next door in France, you're looking at gold priced in euros over there. So in this case here, this chart happens to show a number of divergences. The top chart is the gold futures contract in dollars. The bottom chart is gold in euros. And when gold moves higher, for example, back here on the left-hand side of my chart, we see gold was moving higher in dollars, but it was not making that same pattern in euros. And that actually led to a top inside of gold. So you always like to see a confirmation of what gold is doing in euros. So right now, well, we want to be able to see, we like to see both of these moving in the same direction. And so I'm looking for, and subscribers are looking for, gold priced in euros to clear the 1107.70 area. And if we take a look at this monthly chart for gold, this here takes a look at the price of gold in dollars. That's the left-hand panel. Priced in euros, right next to it to the right. Then next to that is yen, and then next to that happens to be the Great British Pound. We take a look at the Great Bull Run from 2002 to the 2011 high out there. What's preferred is to see gold rallying in all currencies. Now, we had just focused, you and I, just a minute ago, just on euros. I think that's the most important chart right now. I mentioned that subscribers and I went long gold on that recent breakout on Fed Day. And one of the things that we didn't go long the actual metal, we went long the miners. And the reason is that when gold puts in a bottom, or a nice bottom out here, what you will typically see is you'll see the mining sector outperform the actual metal. So where we're at right now, as of a few hours ago, gold has had about a 3% rate of change off the bottom. but the HUI and the XAU are about 5.7, 5.5 rate of change. What you typically like to see, as we did back in 2016 into the run up into July, we saw an outperformance of the mining sector that was like 5 to 1. 5 to 1 out there. You'd like to see it at least get to 3 to 1 or more. The most recent run that we had, we saw gold make a rate of change of about 8%, the XAU 13, the HUI about 11% out there. Here's gold in its horizontal trading ranges. Subscribers of Mastering Probability have a new workshop that's on their members page. It's an hour workshop showing horizontal trading ranges. These help to identify levels of support or resistance. So another real key level for us on a weekly basis is to see gold close above 13.59. And if it does that, Tom, looks to me like we're on our way to 14.26. We'll especially be there if we can see gold in euros breaking out. So that's my report for the week out there. Hardly anything to talk about in these markets.
It's a beautiful thing. You can come over to our website, folks, at TFNN. You go to newsletters, go to trading newsletters, Mastering Probability, 30-day money-back guarantee, and, of course, every trading day right here, 1 to 2 Eastern Standard Time. Steve, thanks so much. Have a great one, safe one. Look forward to the show.
Thank you, Tom.
Stay right there, folks. Coming right back. We have the Dow up 620. NASDAQ is up 192. S&P is up 54. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go inside the Dow Industrials. I'm sure they're all green. We have, well, look at that. They are all green except for good old GE. Putting a juice into the Dow Industrials, and right now the Dow is up 636. Putting fuel into it, Goldman's putting the 64 positive points, Apple 51, Boeing 44. Now, what's unusual here is that Boeing is always the leader, so you can see that there's some juice inside here. Goldman's up $9, putting that 64 positive points into the Dow. You have Apple putting 51, Microsoft's putting 44, Boeing 42, United Health 41, Caterpillar 34. On the downside, the only red Dow stock is GE. GE is taking 1 point away from it, even though that baby is almost down over 1.5%, which is pretty wild. We go into the NDX 100. We take a look at the NDX 100. Strength versus the weakness inside the NDX. Microsoft is the strength out here. That's up to 7.3%. Intel's up 6%. Adobe's up 5.7%, and ADI at Analog Devices is up 5.7%. Taken away from it, Facebook is down 2%. That's nothing compared to where it was. Facebook right now is down $3. It had been as low as, let's see, as low as $10. Charter Communications is down 0.5%. And other than that, you have just about everything else inside that NDX putting quite a few points in the positive way into that market. We go take a look at the king out here. Let's go see what Amazon's doing. Amazon right now up $51, trading $15.47. The high is $16.17. We go take a look at Google. What do we have with Google? Google is traded to a low today. This is intriguing. So Google traded down to 1,008. The low of February 9th is 992. Rejected it. Now you're at 1,044. Microsoft picked up a good hit this morning. That is up $6.46. Now this Microsoft has volume behind it. There's a differential here. What Microsoft has done versus the rest of the market out here. So Microsoft had come down on Friday. Well, first off, come down on Thursday with 38 million, come down on Friday with 44 million, you're going up on 42. Different ball game altogether. Now, that being said, what you still have out here is that you have that high volume low from February 9th, $83.83. That baby's going to get tested. Let me put this on a weekly. So on a weekly, oh, this is going to be interesting to see how this shakes out. Yeah, on a weekly, that's still sticking out like a sore thumb, man. Still sticking out like a sore thumb. Let's go to TWTR and look at a few of the other networks out here. Twitter had a low today of $30.70. That bounced off the low. Now, Twitter has some support at its gap, but I wouldn't be biting on Twitter. This gap that is still open will get filled. We came down to 30.61. And 29.71 is where that gap starts. It goes down to 27.08. Now, I do expect you're going to see that baby will get filled. Snap has the same type of gap. The difference is with Snap is that Snap is actually into the gap. What you have with Snap is that when this thing went topside on its earnings, had a big number, it had closed on the 6th of February at $13.47. Opened the next day up at 21. Right now you're at $16.22, and $16.99 is into the gap. So we're into the gap. So that little baby, those are like magnets, folks. They just drag you right down into it. Took a while to get back here. February 7th is when we did gap topside, and it looks to me like bottom line, whether it's going to be another 2 or 3 or 4 weeks in order to get back into those lower levels. GDX, let's go take a look at the GDX, XAU and HUI. GDX out here, you're up 33 cents. we did on Friday. We took the swing point out on Friday. The swing point we're talking about is on March 6th. That is saying February 14th is game. Now, February 14th in the whole metals market, that was a high volume high. You had wide price spread, had volume behind the move, all of the above. When you take a look at the GDX right there, you're 23.15. Right now, we're 22.45. You can expect that that baby's going to get hit. XAU, same type of setup inside the XAU. XAU had the juice behind it on Friday, took out the swing point of March 6th. That swing point, 81.60. Next swing point, 86.01. And 86.01 does have volume, which brings the probability much higher that we're going to be up there. We'll see whether we can blow that baby away. The biggest one out here was the HUI. What the HUI finally did, folks, it got back inside its higher range. The higher range we're talking about is 174.19, and that needed that for the whole metal market in general. It did it. It had the volume behind the move. We got into the swing point. We did 32 million shares versus 19 million. 179.53. Now, this is where this thing still needs help, and what it is this. We hit 179.75 today. 179.53 is the high of the 6th. And bottom line, we have to take that out. I expect you're going to see some volume in this today. And then the 14th is wide open for the test, which is 190.95. Big numbers all across the board out here. And if we do go over to King Dollar once again, you're going to see that thing is getting toasted. It's coming down with some good volume. They're selling this baby down pretty good. 25,000 contracts. It just took out the swing point of March 7th. That swing point being 88.915. So bottom line, you got this lower level of 87.830, and number one, I think it's going to get taken out. The bigger number here is that if that takes that out with volume also, you very well will have an ABC structure, a small one, inside the much larger ABC structure that we're trading on now. If we go take a look at a few of the stocks, if we look at Gold Corp, you're going to see Gold Corp follow through with the volume. Gold Corp is already over the February 15th number. And this is a good indication that the rest of these stocks are going to get up there. Gold Corp is trading $14 and a penny. $13.80 was the number. Bottom line, you're over it. That's going to build cause. And Gold Corp does have a high volume high at $15.55, which is on the 16th of January. You pull this baby back, and bottom line is that we've been building this base for a long period of time. You know, when we pull this back, this base comes all the way from the nice run in 2016. 2016, if you were on that run, you remember it was a big one. Gold Corp started out at $9.43 in January, and by May it was at $20. And that was the whole sector, by the way. And what we had done, so this is like a 2.5 years of pulling back. You pull back into the strength. You pull back with light volume. We did that in December of 2016. You took off again, not as big as 2017, of 2016 to 2016. So 2016 was the biggest run. 2017 wasn't bad. Bottom line, which is really cool on this one, is that you didn't retrace as much, so you have the probability that you can get a lot higher. Stay right there, folks. Come right back. We have the Dow up 635, NASDAQ up 202, S&P's up 56. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow is up 650, Nasdaq's up 210, S&Ps are up 58. Let's go over and we take a look at Bitcoin. Bitcoin got under the 8,000, I believe, out here. Yeah, so Bitcoin right now is trading down 696. If we take a look at the amount of contracts traded out here also, is that, yeah, on the big, well, not as many as well, that's close. On the CBOE, we've traded 34.93, and the CBOE, folks, is 1 coin apiece. Okay, so that's 3,400 contracts. CME, we've done 2,200. That's 5 coins apiece, so that's 10,000. So we've done 13,000. That is not really a huge amount. We've been pushing about the 17, 18,000 up to 20,000. Bitcoin's going after its lowest swing point from last week. That lowest swing point is 73.86. And, of course, the low thus far after the huge expansion up to the 19,500 is the 59.22. Now, what's intriguing about this is that the high of that low is 79.39. And that's right where we're at right now. We're at 79.24. So as you dig into that high, you dig into that high a little bit more of that low, that's going to have that low wide open, which is 59.22. And as we come into this close, it just doesn't look like this baby wants to back off whatsoever. If we go to the small caps, we take a look at the small caps, the IWM, that's up $3, trading 153.14. And so the small caps were actually the strongest indice as we had gone down. The small caps actually didn't even get to the March 2nd swing low. That March 2nd swing low was 148.40. We got to 140. No, we got to 150. So that's a big heads up there to keep your eye on that. Now that being said, I'd expect still this the 6th. I expect is still going to get hit. You know, the difference being, of course, is that this is the strongest indice. We go take a look at the 3Qs. I believe the 3Qs actually got over the highs of Friday. They did. So the highs of Friday on the 3Qs, we started at 163.30. Right now, we're at 164.09. We had come down, that being said, though, we had come down at 80 million. You're going topside right now at 47 million. But that does say the 3Qs will go into the low that was established out here on the 19th. The 19th of March, we got to a 165.63. You did 74 million. I expect it somehow get in there and pop up into that area. The SPY, we take a look at the SPY. SPY also is trading right at where the downdraft started on Friday. So we are 264.95, 265.02. Oh, this is pretty wild. So 265.02 actually got hit. No, 265.06 actually got hit today. So we actually got over it. And right now you're right at it. The SPY had come down. We had come down with 183 million, we're up at 105. That also can get up into the 19th. The 19th there, that low is 268.62. We go take a look at the diamonds. What we have with the diamonds inside the Dow, that's over the low, over the highs of Friday. The highs of Friday was 240.90. We're at 241.86, and that's going to put the same deal there because that was the 19th was the number on the way down. That's 244.32. We're at 241.78. We'll go take a look at the Boeing. Let's go see where Boeing is right now. So Boeing is trading at a price point. Yeah, this didn't do much. Interesting. So, you know, Boeing has been the big mover inside the Dow, but what you have out here today is that Goldman has taken over. If we go look at Goldman, Goldman's up $9.68. That's a 254 stock. That's taken over. Apple's caught a big bid. Apple is up $7.70, 172. And Apple's, you know, the volume on Apple's not bad either. Intel, INTC. That's a big number, man. Intel's up $3 now. Intel didn't even back off from the highs. That's intriguing. So the high of Intel was 53.78. The low that it actually got into was 49.36. Now, what's intriguing about Intel too is Intel does not have a high volume low at the February 9th. You have 49 million, and you're actually going into 89 million. So Intel's a whole different ball game, man. Let's go NVDA. Let's look at NVIDIA and see what NVIDIA is. NVIDIA has that high volume low. You know, bottom line, you're up to $10.61, but it does have that high volume low out there for 243.60. LRCX, Lam Research. Lam Research. So Lamb's up $11. You're trading at 214.01. Yeah, this is this backed down with light volume. It did back down with light volume. Right now we get the Dow up 686. A couple of targets in the den. They were right. Bottom line, they were looking for that 700. Unreal. They'll probably tag it. You get the Dow up 685, Nasdaq up 224, S&P's up 62, and that's going to be about 3%, I think. Yeah, 2.9% inside the Dow Industrials. Nasdaq up 3.23%, and the Nasdaq had given up, I think, 6.7% last week. Let's see, Friday. Yeah, so 74.15 we had started out at. Big numbers, man. Big numbers across the board. There's no two ways about that. We'll go take a look at the, let's go take a look at the yen in Japan. Why? For the gold market. Yen out here, we're at 105.46. Now, what the yen had done today is that we got down to 104.74. Looking at the yen, if you're a bull inside the metals market, folks, you want to see this thing down somewhere about 99 or 100. 99 or 100, what that sets up is that sets up much higher prices inside the metals market. Silver, let's go take a look at the silver market out here. Silver right now, we are trading up 0.6%. You're at $16.69. And we've done 78,000 contracts. That also has some juice in it. Silver still needs a, I'd like to see another sign of strength in silver. Silver's kind of still in this consolidation. You know, I do expect we're going to go up there and go hit that 1689, but bottom line is that it needs that strength. We go look at the SLV, what we have with the SLV. SLV is did 7 million shares. Yeah, you're coming into 11. See, we need some more action inside the physical silver market. We go look at Pan American Silver, PAAS. So that came into the swing. That had the volume. That's good. That had the volume. That's almost 1674. We're at 1607. 1674 is that February 14th swing high. Dow Industrials right now up 676. NASDAQ up 224. S&P's up 62. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the Dow up 685 or 2.9%. NASDAQ is, well, they're all big numbers. NASDAQ up 227, 3.2%. S&P's up 63 or 2.9%. We go take a look at the SPY in general. What you're going to see out here is that the SPY is over the highs of Friday. We started out at 265.02. You're at 265.30. Bottom line is that, the next number to keep your eye on now is going to be March 19th. March 19th, that number, I suspect we're going to go after that number. Now, that is the low of the high. That's what you're looking at in that particular case. We go take a look at the TVIX. Okay, so these babies, well, I suspect this is all about the VIX. Yeah, they pulled back, and they pulled back pretty good. So you had the high out here today was 1043. Low right now we're at 917. The volatility index, what do we got with the volatility index? Right now the volatility index is trading at 2114. That had a high in it today of 2454. This is intriguing, though. This actually hasn't pulled back that much for the amount of upside that we just have gone through here. You have the trend at 0.54. Now, 0.54, that's a small number. Let me see what the tick is out here for a second. So your tick was a plus 1396. You know, that's not even extravagant. Most times that when you see the type of bounce that we just got here, most times you'd see a much larger tick. And what that is, I suspect, is that this was just a steady all day long from that low that was established out here at 11, I believe it was about 11:40 this morning. So if we take a look at this ESM, yeah, 1120. 1120 S&Ps are at 2602. Stay right there, folks. Going to be coming back with some numbers. Dow Industrials right now up 686. You get the NASDAQ up 229. S&P's up 63. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. It's making a great week, folks. In fact, you know, market-wise, it's only a 4-day week. Good Friday. Markets close this coming Friday. Create new agreements based on love and respect. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We had the Dow Industrials up 669, NASDAQ up 227, S&P's up 58. Percentage-wise, 2.84% in the Dow Industrials, 3.2% in the NASDAQ, 2.69% in the S&Ps. Gold contract traded up $2.70, trading at a price point of $13.5270. Silver up 11 cents, $16.70. Oil $65.48 a barrel. Notes and bonds. We had the 10-year note down 6 ticks, 120.13. 30-year bond down 6 ticks, 144.17. Now both 10-year and the 30-year, they pulled back. They had lighter volume on the pullback. Bottom line, they still want higher price, lower yield. Really hard to comprehend in this type of market, but bottom line, that's what they continue to say when you take a look at how much buying is getting done and how much selling is getting done inside the 10-year and the 30-year. King dollar down 398 ticks, 88.635. Now, King dollar is into the high of its low, meaning the last couple months. It's going to go after it. Bottom line, you did come down. You had wide price spread. You had volume as it came down. So what that sets up, number one, going to set up a test of that area. The real kicker is going to be, does it break that area with volume? Because then what you're going to have, we have a large ABC structure on the way down with a price projection of approximately 82,340. Then what you're going to have, if we do break this, is that you're going to have an ABC structure inside an ABC down. That makes the probability much higher, number one, that you're going to get down to those lower levels. We get down to those lower levels, you're going to see this metal market not only go topside, you're going to see it go topside in a very large way. Inside the Dow Industrials, the strength versus the weakness inside the Dow. We had a change of leadership out here today. Dow Industrials, Goldman Sachs, that put $66 into the Dow. Boeing was number 2, 54. Boeing is always up at the top. Apple put 53 in, Microsoft put 45 in, United Health 44. So inside of this right here, there's no doubt Apple and Microsoft, those put some big numbers inside the Dow. The only equity inside the Dow Industrials that was in the negative was GE. GE trading at $12.89, traded as low as $12.73. GE's got some monster problems, man. That's coming down with volume once again. That baby is going after the highs of the lows of 2011. NDX 100, the strength versus the weakness inside the NDX. Big numbers. Microsoft was the big number. That was up 7.5%. Adobe was up 6.4%. Netflix 6.4%. Intel 6.3%. So check this out. Inside the NDX 100, this is pretty intense actually, is that the only negatives that we had inside the NDX 100 was paychecks and Charter Communication. That's pretty intense, man. That's out of 100 in stocks, by the way. Big numbers. Big numbers. Let's take a look at a couple of the big dogs out here. Amazon. Amazon closed up $60. Trading at $15.55, big number there. Facebook, I would say, is one of the biggest turnarounds out here. Facebook had a low out here of $149 and came up $15 from that point. Facebook closed at $160.06. This had been a one-way route on the way down. We went from $185 on the 16th of March down to $149. If we do take a look at this and you pull this back, what you're going to see is that it went right into where it broke out from on the July of 2017, which is $147. That's when it went topside, had the juice beside it, comes all the way back there. What you do have on Facebook right now, though, is that now you absolutely, well, you have a hammer and you have a monster hammer. There's no doubt about that, saying that Facebook would run to higher price right now, and it looks like what his game is probably well, that's not that big. 161, 161.95 is the 20th That's where we had big volume. That's when Facebook blew away the February 9th level. February 9th on Facebook is 167.18. That was the high volume low on Facebook. It ripped that baby apart. Came down. Now what you're going to be looking for on Facebook is what kind of counter trend bounce do you get? If you get that counter trend bounce, that baby's going up there on light volume, all that's doing is setting up the next leg on the way down. Some of the other higher volume stocks we had out here today, you had, let's see, Marabell was flat. Actually, high volume, though. Flat, trading $34.64. Wells Fargo was up $1.31. You had J.P. Morgan up $3.30, trading at $110.31. Citigroup was up $1.88. So you did have the banks, excuse me, going to higher price. If we take a look at the XLF, not bad volume either. The volume came in the XLF. We went up with 83 million. You had gone down with 89. Inside the XLE, let's take a look at the energy, see how energy did. It's not bad either. You know, the XLE still in this bottom and lower consolidation that it has been in since February 8th. The XLE couldn't get out of the downdraft that this came into starting on the 24th of January. That's when the XLE was at $78, goes straight down to 66. Still staying in that consolidation, so that still has some big problems. If we go over to ExxonMobil, we take a look at Exxon. Same setup. Exxon is actually below the February 9th level. We're right at it. $74. The low of February 9th is $73.90. So oil market in general still has some problems out there. Google. Let's go take a look at Google. That had that bounced quite a bit also. Yeah, for sure. We went up, let's see, 50. We're at 47 $47, $44 off its low. Google traded to a low of 1,008 today. We're at 1,053. Did volume. We did some volume. You stay right there, folks. We're coming back with some numbers. Dow Industrials closed up 669. NASDAQ up 227. S&P's up 61. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go over and take a look at Overstock. So Overstock.com, folks, closed at $44.60. The high for the year is 89. We take a look at this equity, and this is an equity that no doubt went topside when bottom line here. We'll pull this back so you can see how pretty dramatic this actually was. When they got involved in, number one, buying Bitcoin. Well, first they were taking Bitcoin, then they were buying Bitcoin. This equity went from a price point in August of 2017 of $14, goes up to 89. Now you're back to 44.60. You have a high volume low at $40.30. Right now we are trading at $40.70. So you got the high volume low, and what this is about, they're not saying what they're going to issue the stock at yet, but right at the close, they are, let's see what they say here. Oh, here we go. Okay. Overstock announced it intends to offer 4 million shares of its stock. Overstock also expects to grant the underwriter an additional 30-day option to purchase an additional 600,000 shares. The offering is subject to market and other conditions. Now this is the public offering will be pursued to a shelf registration. So what a shelf registration is, folks, is that first they put the shelf registration up there, then they can do the offering anytime that they want. That's how that works. Most times, though, what ends up happening is that they're going to at least put a price on it. Now, here, they don't have a price on it just yet. Yeah, the offering is subject to market and other conditions, and there can be no assurance as to whether or when the offering may be completed or the actual size or terms of the offering. So most times, this is what happens most times. Now, let me see this for a second. So you're at 40. You closed at $44. You're trading $40.50. Most time, the broker dealer that's doing the offering, most times will protect themselves on one side of it if, in fact, it had already been priced. Now, if it's not already priced, different ball game. So they don't seem to say much more there whether it was priced or not priced. Let's go take a look at. There we go. Red Hat. Red Hat closed at $153. That was up $5. That right now is trading up an additional $8 at 161. And at 161, look at this. This is an equity that didn't get hit at all on the downdraft. This is pretty amazing, actually. This is going to break all-time highs. That's what it looks like. Yeah, it is. This is pretty intense that this equity didn't get hit at all on the way down. So let's see what Red Hat has to say. Earnings per share, the estimate was 81 cents. They made 91. Revenue, 761 million was the estimate. They made 772. They actually also see first quarter revenue. So this is the fourth quarter. The numbers I just gave you is the fourth quarter. They see first quarter actually, let's see, first quarter revenue, 800 million to 810 million. The estimate had been 795 million. The earnings per share, now that's going to be a little bit different, but bottom line is that the market, they're saying the adjusted earnings per share, the estimate was 72 cents. They say they're going to do 68 right now. Bottom line, though, that's quite a expansion of price. And what's more impressive, actually, is that when you actually take a look at this, just look at this stock, man. If you want to see like what strength is on a downdraft. So this equity here has been trading at the price point of 156 for quite some time, meaning we go back over to March 7th. March 7th, almost every day it was hitting 156. The downdraft of last week only took it from 156. We closed Friday at 147. You know, and that compared to the rest of the market, that's nothing. And now, of course, you're right up and over this. And if I put this on a monthly, this has been a record. This has been a one-way trade, that's for sure. January of 2017, the stock's at 69. Now you're at $1.60. Big number, huge number. No doubt about that. So they're doing the business. There's no two ways about that. Bitcoin, yeah, Bitcoin. Bottom line, XBT, Bitcoin broke the 8,000 mark out here. We're at the 79.02. The swing point that's going after is 73.86. That's the swing from last week. Now, what Bitcoin has going for it in a bad way is that it got into the high of its low from February 6th. 79.39 was the high. We're at 79.01 right now. That brings the probability higher. The higher, the faster you dig into that number. And that number, by the way, that's a $2,000 spread from its low. That's when we had come off the highs of 19,500. You had gone straight down to 5,900. But the day that it closed at that it traded 5,900, it ended up going all the way up to 7,900. Okay, so you had a price spread there of $2,020. Monster price spread. No two ways about that. Huge price spread. We go take a look at the FNV. Let's go take a look at a few of these gold royalty stocks. FNV, which needed a bid. Not bad. Still need more volume inside Franco-Nevada. We're at 70.60. Royal Gold, which has been the leader up here. Right now, that is almost at the, it went into it today. So one of the benchmarks inside the gold equities, folks, the 14th of February, Valentine's Day. That number, Royal Gold's right at it right now. Needs more volume. The one stock that seems to have it all pretty much right at this point would be Goldcorp. Goldcorp got into that $13.80, had some good juice into it. We did 10 million versus 13. Still could use something. That's holding pretty good. And what Goldcorp does have is that Goldcorp has a high volume high out here at January 16th, $15.44. We pull this back a bit, and you can kind of see how this whole thing has been set up since the first run from December and January of 2016 going up to that May. This is the whole deal. So we're going to make another run. The real question is going to be what kind of price spread we're going to get that run, what kind of volume we're going to get in that run. Thus far, it's acted pretty good. FCX. So let's go take a look at FCX, because what you have here is that FCX still under consolidation. This is the largest gold and copper company in the world. What I expect you're going to see here, this thing's not done consolidating yet. What I do want to do, I want to go over to SCCO. The reason being, Southern Copper was the first time they pulled back at all in a long period of time. That pulled back to $52 today and then a rejected lower price. Now this is powerful, because Southern Copper, I'll look at a few others. Let me go look at TGB, because these copper stocks last week had a problem. Taseko still has a problem. You stay right there, folks. We'll be coming right back. We had the Dow Industrials finished up. Dow Industrials finished up by 669. NASDAQ up 227. S&P's up 61. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it, so call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at the physical oil market. So this article's kind of really intriguing, actually. So you get physical oil, we're at 65.51. You are at the last high. Last swing high up here is 66.02. In West Texas, folks, Midland is the center of basically oil in West Texas. This is intriguing, though. And let me tell you something. If you go on the map and look at Midland, you're going to see there's not a huge amount of anything there. But guess what? Plenty of money. And the lows of oil, what this article is about, is that oil up at $65. How much hotel rooms are? I mean, and I'm not talking about like luxury hotel rooms. Bottom line, hotel rooms right now are pushing $370, all the way up to $700 for these oil executives. Well, I don't even know if the executives come in. Bottom line is that if you want to just see how fast that expansion went up, let me look at this for a second. This is pretty cool, man. So that expansion, the average hotel room in 2016 was $93. But look at this. Yeah, big difference. But the average price, if we pull this back, of oil, there we go. So 2016, yeah, the price, well, there you go. Price, that's when we actually hit the lows. You hit $26 going all the way, so they don't qualify like how far In 2016 it went. But bottom line is that you can see that was the bottom. $93. Now you're dealing with $400 to $700 room. It's amazing what how the economy actually moves. You know, you get commodities pushing up. Guess what? No matter where you are, if that's the epicenter of where those commodities are, there's going to be big money made there. No two ways about it. Let's go take a look at Anico Eagle, AEM. You know, this got back. This is trying to, it got back inside its larger trading range. That's $40.70. We come off the low a few weeks ago of 37. You're at 42 right now. And if we go take a look at the Canadian dollar, because what we are going to have here inside these Canadian companies, Canadian gold companies, is that thus far this Canadian dollar is staying weak, which is positive for them. We're at 128 Canadian dollar to $1 US right now, and that actually got a lot weaker when these tariffs went in February 1st. You know, we were at 122, goes all the way up to 131. That's on the shorter term. We've been in this consolidation, though. It looks like the top of this consolidation. We'll see whether, well, 129. It actually just rejected 129.20. And you bring this back to 2011, this was pretty amazing when the Canadian dollar was actually stronger than the US dollar. That's when $1 bought 94 cents in a Canadian dollar. Then, of course, we went all the way up to 146. Can you imagine that? That is like really a trip. That $1 is worth $1.46 Canadian. So just to give you an idea of something like that, that would be like saying that you have you want to go buy a house in Canada. It costs you 600,000 Canadian. Well, at that particular price up there, that would only be 400,000. That's how dramatic the correlation inside currencies can get. Particularly, what's amazing is that when these countries are so close to each other, you know, that is a big number, and the fluctuation is huge too. I mean, it's if we just take a look at this again, what you're going to see, you know, pull this back when it was at 149. I think that's what I said, right? Yeah, so 146. Let's just call it 150. So every 150,000 is only 100,000 US. That's pretty intense. So every 128,000 right now is 100,000 US. You can see you buy something at 500,000, really costs you 400,000. You know, US that was. Now what happens, of course, is that you better make sure that you either hedge yourself or you know those numbers if you're going up there and you're doing something like that. I bring it up in the aspect because I remember the last time that when gold really took off, what had happened also is that the Canadian dollar, well, this is where it went. The Canadian dollar got really strong. And people were in shock that the Canadian companies weren't making as much as basically people thought they would. And that what that had to do with is that the Canadian dollar hadn't got that strong because our own dollar hadn't got that weak in so long. So the Canadian dollar got down to 90 in 2007 and 2011, and that's what, it was 2011 when it really hit it, because in 2007 everything was down. In 2011, gold was at highs, the Canadian dollar was at 94, and what that did is that took a huge amount of earnings away from these gold companies, because they get paid in US dollars and they have their expenses, not all of them, but they get the expenses in Canadian dollars. Like if we look at Gold Corp, that's 15,000 employees, their expenses are in Canadian dollars. You know, thus far, and what's intriguing here, the reason I'm watching it so close is that thus far, Gold Corp is one of the strongest stocks out here, and 1555 looks game on it. And that has to do, you know, with the aspect that that Canadian dollar is staying weak. The reason that's staying weak has to do with the aspect of lumber, the aspect of steel, and the TAF structure that's going back and forth. Let's go take a look at a few of the housing stocks. We'll go Toll Brothers. Toll Brothers trading $44.23. This was up 23 bucks now, 43 cents. Now this is intriguing too. So these had already come down in February. They're laying at February's lows, February 6th actually. February 9th, they didn't have high volumes. This is interesting. Okay, so this is back testing the 2nd of November swing low with light volume, which is 43.22. Put this, yeah, these are still at highs, man. It's still a good number. Let's see, we got a few more of these. Lanai, let's pull up Lanai. Lanai's trading, same price structure, same time frame, $59.21. Yeah, but you know what? These aren't backing down. You got, they had broken out, so they broke out at $52 to $58. That was, Lanai did break out. This is actually an ABC up. Look at this. Okay, let me look at this again. Now, let's see. Well, I take, well, it's a small one. 55, well, it's pretty good. It's 25 bucks. 37, 47, 57, 63. I see it, already hit it. So this actually already finished. This finished an ABC up, so this is building cause now for higher price. Dow Industrials finished up 669, S&P's up 61, NASDAQ up 227. Big percentages up here, folks. You had the Dow up 2.8, NASDAQ up 3.2, S&P's up 2.7. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timer's Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at the SMHs. So, bottom line is that inside the NASDAQ out here today, that was some of the big numbers, folks. SMHs, they were up 4.4 today. You're at 108.24. You get down on Friday, 8.4 million, up today on 5.5. It looks like your next level here all over the place is this March 19th, the lows of March 19th. That's how this seems to be set up right now. Intel had a big day out here. Intel had one of the biggest days, actually, because what you have with Intel, it's almost like back in the 90s. Microsoft and Intel, they seem to be gaining big traction. So Intel, they're both, Intel's actually even better looking than Microsoft. Intel is advertised. Intel's up $52.48. The closing high was $51.78. So we very well may be at a closing high. Yeah, we are. We're at closing high on Intel. And that's after a downdraft. But as I said a little bit earlier, bottom line is that you didn't, Intel didn't come down with any volume whatsoever. Let's go over to Qualcomm. Qualcomm, of course, got out of the sights of Broadcom. This different ball game. You know, when it got in Broadcom's sight, Qualcomm went from $50 all the way up to $69. That was going back into November. Came all the way back down. There's no juice here whatsoever. Let me pull this back for a bit. Oh, look at this. This has been a monster consolidation for a long time. Actually, this is, yeah, it looks like they need some help. You know, when you take a look at Qualcomm, you're back trading where we were in 2008. Look at that. Different ball game altogether. Yeah. So that sets up a whole different ball game. It looks like they do need help. So that's going to be intriguing to see how this whole thing shakes out. Xilinx, XLNX. So Xilinx, I'm in Mr. XLN. I'm in Mr. Dave White. We have been talking about Xilinx on the Friday program. This is, I mean, Altera got taken over by Intel. Xilinx is at highs. You know, this was a one-way shot from 2008. $14.78. You had $74.20 right now, and yeah, this is. Now the difference with this one also is that when this did come down, you came down, but you didn't break a swing, and you actually did go into higher volume. So we came down on the weekly with 20.7 million. And you were going into 29 million. Look at that. So when this broke topside in April, went from 59 to 64, you had 29 million. We get down to 62, rejects the highs and the lows, and have 20 million. So the way that that thing is set up, that also looks like it wants higher price. Let's go take a look at Ma Bell. So Ma Bell right now is in court with the government. Ma Bell's trading $34.69. What this is all about is that Ma Bell wants to take over CNN, I believe, Time Warner, and the government wants to stop them. Well, the trial started, I believe, today, and right off the bat, I'm telling you, man, these when when either in the financial business, the political business, the court business, you better be prepared, man, because all of it is vicious. So coming across the network right now is that you have the judge overseeing the U.S. trial seeking to block AT&T from buying Time Warner, issued a stern warning to lawyers on both sides after an attorney, I don't know if for the government, witness gave his client transcripts of opening arguments and testimony by other witnesses before he took the stand. The witness, Warren Schinleiter, the president of Dish Network's Sling TV Group, an internet streaming service, he said he was being called by the Justice Department in an effort to persuade the judge to block AT&T's $85 billion takeover of Time Warner. Allowing Schinleiter to view the material violates court rules, and no witnesses are to have advance notice of prior testimony before that person testifies, with the exception of experts and representatives of the parties involved. The judge allowed Schinleiter to testify, saying that the defense would have carte blanche to cross-examine him, and warned that if it happened again, the witness would be stuck and the responsible lawyer would be held in contempt. The top executive of Turner Broadcasting is also slated to be next witness. The executives are the most high-profile witnesses yet in the trial, and follow testimony from Cox Communication executive Thursday, who said she fears that if AT&T acquires Time Warner, it will gain leverage over Cox in programming negotiations. The government is trying to make a case that the deal will give Ma Bell the power to raise prices on rival TV distributors, which in turn pass them on to consumers at the cost of more than $400 million a year. Buying Time Warner, according to the Justice Department, will also give AT&T the tools to undermine emerging competition from online video providers like Sling TV, Dish's online TV service. Expect Schinleiter to support that part of the government's case. AT&T dismisses the Justice Department's argument that it's trying to strangle new rivals, and said, instead, it says, the deal would benefit consumers by allowing the resulting company to adapt and take on Netflix and Amazon with new products. The government hasn't divulged a schedule for the remaining witnesses. It plans to call University of California, Berkeley economist Kyle Shapiro is expected to be a key witness for the Justice Department, because he'll explain how he came up with the estimate for the higher consumer costs resulting from the deal. Let's go see what Time Warner is trading. See if we get any clue as to who's going to win this baby. TWX. So Time Warner is trading $93.99. Yeah, I can see where. So when the deal was announced, it goes from $78 up to $103. When the Justice Department says it wants to get involved, it goes down to $85. Here at $93. It's not bad. I mean, not great, but not bad. Ma Bell, we take a look at Ma Bell. That's trading $34.69. And this has been a consolidation for a while. It's a high-volume consolidation, but it's been in there for a while. Yeah, it's still up there. So 2007, we've been, yeah. The high of 2007 is 42. The high of 2016 is 43. You trade to 34. The bottom of this consolidation is approximately $30.97. And revenue-wise, let's see what this is, because this is going to be a big number. So Ma Bell does $160 billion, and TWX $160 billion. TWX does 32. So going to be $200 billion company. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we go over to Facebook and take a look at Facebook, what's going to be intriguing here is to watch how this whole deal comes down, meaning that the run's been incredible, no doubt. $17 in 2012. You get up to $195. You come off that high volume, reject the lower price today, and bottom line is that the people are the product on Facebook, and that's how this comes down. If you want to see the breakdown of numbers, this is pretty cool, folks. So when you take a look at Facebook versus Google, this is how the numbers go. The gross margin for Facebook, 87%. 87%. Their net income from that margin is 39%. So it's all the users, they are the product. Get the information, sell it to advertisers, sell it to everyone. It doesn't matter who it is. The bottom line, that's how that shakes out. Google, somewhat the same deal. They're basically, but they're getting, well, somewhat the same deal, I suspect. It's still targeting people, advertising, all of the above. The difference is that with Google, they're running a 59% gross margin, and they only bring 11% to the bottom line. The differential, of course, has to do with we're searching on Google, then they're taking that information we're searching for, they're giving it to the advertiser saying, okay, go after this person, go after that person for this particular item because they know they can bring us right down to it. The Facebook deal is different in the aspect that basically they're scrubbing our computers, they're scrubbing your phones to get your contacts for everyone simultaneously. Product-wise, we'll see where this whole thing shakes out, man. But you can see when you basically have a gross margin of 87 cents for every dollar that is like one monster number, man. That is about as intense as you get. Facebook rejected that lower price out here today. You're going to get a bounce. That being said, now you have a high volume low in Facebook that will get tested again. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here, 8 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.